Good evening, everyone. This is Wayne, and this is the video version of the trade report for Thursday, February 8th, 2018. Today, we're going to take a page out of Yogi Berra's book. It's deja vu all over again. All right, everyone, welcome to the trade report. And we had a very interesting day today. This entire week has been one for the record books, and we closed down another 1,000 points plus on the Dow today. We just kept going down, down, down all day long. We had a one point in time where it looked like we might have found a low, but no, all of a sudden the unwinding continued. Now, we did have a little bit of buying into the close today. The way the futures trade, they trade until about 1:15, and then they quit for 15 minutes, and then they start up again for 30 minutes, and then they're down for an hour between 2 p.m. and 3 p.m. Pacific time, and then they start their new day at 3 p.m. Well, you can see that the 3 p.m. open is resulting in some selling coming in again. So we have a very, very scary market that looks like it's still ready to head even lower. So when we talk about a market going lower, everybody's first question is, well, how much lower can it go? And that's a great question, because knowledge is power, and knowledge gets rid of fear. And so when we're looking at a market that is seemingly out of control to the downside, we definitely want to have some semblance of an idea as to how far down it can go. Well, let's take a look at that. So on my Fibonacci's, I like to use retracements, and I like to use symmetry support levels. So I'm going to just do this live with you guys, because I love doing Fibonacci levels, by the way. Fibonacci levels are kind of the keys to the kingdom of technical analysis, in my opinion. And before I get started on this, I want to let you know that this charting program I use here that I'm showing you is actually one that's provided by TD Ameritrade called Think or Swim. And that is the charting program I use, along with the other implements of my trading arsenal. This is a watch list, and then I have the place where I can place orders, which is right here. When that populates, we can put in a symbol like NVIDIA. So NVIDIA reported earnings tonight, and I know I'm getting off track a little bit, but I just want to show you the different things that I use during the day, so you have a little bit better idea of what I do and how I do what I do. And it gives you a little bit of insight. So I'm getting a little bit of difficulty here trying to get this queued up. And let's see here. NVIDIA reported earnings tonight and just absolutely blew it out of the park, or knocked it out of the park, I guess is the saying. But they're up like $15 in the extended session. They closed at 217.52, and that was down $11.28 because, of course, the market tanked today. And now they're trading between 235, basically around $235 a share, so about $18 higher in the extended session. So anyway, as I look at this charting program, this is the options chain, and I can open up an options chain month or series, and it gives me all of the information I need to make a decision about trading. And these are all option strikes. I don't expect every one of you to know everything about this, but it is kind of interesting to be able to kind of show you what I do and how I do what I do, and put some context around my video. So without getting into this any more deeply, what I do want to do is show you how I determine how much of a move a stock, or in this case an index, can make based on the question, how low is this thing going to go? Well, if we take a look here, this is a chart of the SPX, which is the S&P cash index. That's where we get our S&P numbers from every day. And the S&P traded down, looking at the number here, everyone's fixated on the Dow on the news, so that's the number I like to give. But the S&P is important to me because, of course, I trade the S&P futures. The S&P traded down 100.66 points today. And the ES, which is the ticker symbol for the S&P futures, has already reset because it's after 3, but I think it was down about 70 or 80 points. They're not always in alignment with one another. All right, so what I do on this program is I run retracements, and basically that provides me with levels at which price is going to do something in particular. It's going to either go through it, it's going to acknowledge it, it's going to, and it's a matter of providing kind of a laddering technique based on the mathematics of Fibonacci's, which have a variety of different uses in our world. And suffice it to say that in trading, they are extremely powerful. And my mentor, Carolyn Borodin, the Fibonacci queen, really impressed upon me the power of Fibonacci and showed me time and time again how the Fibonacci levels can be used and utilized to set up trades, to understand what a stock or an index is going to do next. And of course, the implementation of Fibonacci timing is one more level that has almost alchemical dynamics associated with it. It's almost portentous. It has a predictive quality associated with it. For today, we're just going to look at the levels. And as price moves through a level, we eliminate that level because it's already been tested, it's already been worked on, it's already been worked out. And so you can see how this price level chart, this price level graph, if you will, we've made it down to this 1272 here. Now the 1272 is a target, and it's a place where when price hits it, technically it will most times bounce back up from it. And as you can see, it did do that. Even after that huge move we had on Monday, we came down to the 1272, actually went through it, but bounced back up again and closed well above it. So the target was hit, it was moved through, and then it came back up again. And that's what gave us that piercing signal that I talked about in Tuesday's video, where this candlestick came up into the body of this candlestick, and that's a bullish signal. Well, on Wednesday, yesterday, we did not have, I should say, a confirmation of that bullish signal. So this candle here basically refuted that candlestick pattern of bullishness and turned it back into bearishness. And it was confirmed today on the bearish side. So you can see where today's candle really pushed us back down through that 1272 level and down toward the second target, which is the 1618. You can see these levels right over here. And I do expect that price tomorrow will find 2550 on the S&P, the SPX, the S&P cash index. And again, that closed at, I know it closed down 100.66 points, but it closed at 2581. So at least a 31-point move down to get to that second level would be in keeping with the Fibonacci levels that are being drawn as a retracement from that low here and up to this high. So what we have is this area here that is just ripe for price. So again, that's what helps me get to the place where I can understand what's happening with price, is by drawing and being able to read and understand the Fibonacci levels. So the other thing that I do, still in keeping with the Fibonacci's, is use the Fibonacci charting program in Thinkorswim, the charting program that I I watch throughout the trading day. And I do use this trading program too, but not as much as this trading program here. This is a 15-minute chart, and the one that I showed you on that other program, which is called DT, Dynamic Trader, is a daily chart, and that's just the way that I've chosen to set it up and use it. So right here we have a number of different levels that came into play here, and here on the intraday level. Now I do have the daily levels set up on this chart as well, and we came down to the 2618, which is basically the third standard deviation move for this index. 3 standard deviations is amazing. That's basically less than a 2% chance, less than a 3% chance that price will find this in a given period of time that's being measured. And it found it. So we have some very significant and powerful price action going on here that is definitely going to move us into tomorrow with momentum. Now, today was scary. Today was a big down day. Today was a day that just really took us by storm again, just like Monday. Monday came at us and we really didn't know what hit us. And it left a lot of people reeling. And today, yes, it was scary. Yes, it was a big move. And yes, there was a lot of energy around it, but it was significantly more methodical. It didn't have the panic selling, the capitulation that Monday had. Yes, there was an enormous amount of selling and hardly any buying at all. But it wasn't the fear-based selling that Monday was all about. So this was, I don't want to say it was manufactured or engineered, but I will say that it was definitely big money unwinding positions they needed to get out of, wanted to get out of, and are getting this market back to a place that is fairly valued. We were so overbought. We were so high. We'd come so high, so far, so fast. And this is the price we pay for having done that in such a short period of time. So this market is just taking no prisoners. And I do expect it to continue to the downside. So tomorrow, when the market opens, again, my thesis is that we will go lower. Now, we have the overnight session to consider as well. The Asian and European markets will be trading. And on the heels of a market move that takes us down 1,000 Dow points and 100 S&P points, the Asian and European markets are not going to find any reason to buy their markets. They're going to continue the selling. So again, we've got this snowball effect, this cascading dynamic that feeds on itself. And given the fact that tomorrow's Friday and that traders typically do not want to be in positions on Friday, I think we're going to have more selling than what my Fibonacci charts are indicating. We could actually have a rather significant rout tomorrow. And tomorrow, it's quite possible that some of that fear-based selling could come into the picture. What we end up doing is we get distribution cycles. We then transition to selling cycles if the task is not accomplished by the distribution cycle, or if some binary event or some other situation occurs that stimulates the buying. And then we get the emotional component associated with the selling. And so we go down, down, down based on a varying degree of selling. And so initially you have this approach that's normal, this distribution cycle that's all part of the accumulation distribution dynamic of the market. It goes up a little while, goes down a little while, goes back up, and kind of makes a zigzag and ultimately ends up going higher every time it goes higher. But if the distribution cycle is interrupted by something, distribution turns into selling. Then selling can become capitulation. And then capitulation can become panic selling when the emotion comes in. Now, capitulation is basically the term given to market action to the downside, where people are just saying, I'm getting out of this thing. I mean, they've made a decision consciously to exit their position. Panic selling is when the big money is just throwing everything at the sell button. They don't care. They're just getting out. I mean, it's just, and that's what we saw in the financial crisis. Now, we saw a little bit of capitulation on Monday. There was no capitulation or fear selling today, which is little compensation or little consolation for today's action, but it was actually a good sign. However, tomorrow, after the Asian and European markets do whatever they're going to do in light of this, we could have some rather significant selling. So again, that's my thesis. I'm not necessarily going to be right. We'll see. But because we're going into a weekend, weekends are always looked at with a little bit of concern because so much can happen while the market's closed. And then when the market opens on Sunday, you can have a gap open, which basically means that the market either, where it closed on Friday, it either opens much lower or much higher on Sunday when it opens. At this point, given the sentiment in the market and everything that I think will transpire and the energy of this market, I think we close lower tomorrow. And I also think we could gap lower on Sunday. And I know that's not the news any of you want to hear, but it's in keeping with what I'm observing and what the highest probability of market action is actually portraying at this point in time. So, enough said. I've made my point. I've showed you how I do what I do. I've introduced you to a couple of things that I hope you found interesting. I can get into more detail in a future video about those things. But for now, I think the most important thing is to just help you understand what's happening in the market and what I think is going to happen in the market going forward. And then the last thing I really want to say is, why is this happening? Again, too high, too fast, unwinding of positions, some circumstances and situations that arose on Monday internally in the stock market that need to be worked out. There were some issues associated with certain financial instruments that basically became a debacle and have to be repaired, have to be fixed, have to be compensated for. We're going into a weekend, and tonight at midnight, the government's going to close down unless Congress and the Senate and the president signs a continuing resolution to keep the government open. So a lot going on, a lot that needs to be accomplished, and we'll see how it all plays out. So until next time, good night and good trading.